Good morning. It is Monday, November 11th, 2025. Welcome to this week's Clubhouse Insider, your go-to market update for all things mortgage and real estate finance related. So let's get right into it. We are 15 days away from Thanksgiving and 46 days away from Christmas. The holiday season is upon us, which means both consumer behavior and the housing market rhythms tend to shift a little bit, but there are still a lot of motivated buyers out there. As a quick reminder, we do have a bank holiday tomorrow, Veterans Day. So it's a good time to recognize and thank any service members, of course, in our lives. So getting to it now, rates continue to hover around 10-month lows. Which is positive for buyers and refinancers. But that said, as I've mentioned before, any Fed rate cuts or any kind of plans like that that you're looking for in the news to spark everything does not automatically mean mortgage rates will drop. What drives mortgage rates is market expectations and economic data, not just any kind of Fed or announcements or any major headlines you might see. Headlines are always behind. Don't forget that. Headlines are always behind. So if you're focused on headlines, then you're very well likely behind the curve on what's actually going on the ground. But the next Fed announcement will come during the Fed meeting December 9th and 10th. So right now, Fed members are mixed on whether they should cut or not, but could get more data to help their decision here soon because there looks like there could be a deal this week to reopen the government. That will help because data will get released, like the long-awaited jobs report, and take some guessing off the table from traders. Last week, rates went sour a little bit for a day after the ADP jobs report was released because traders just need something to roll with. So the market's rebounded the next day, but has since started out the week a little bit slower here. So of course, if you've seen me do these updates before, I want to see a 3 or lower here. If you want really low interest rates on the 10-year treasury, this is what most closely follows rates. And then you can see here just about over the last month what mortgage rates have done, right? So just here to start November, we've gone up a little bit. This is the expectations from the Fed cut day. Look, it's gone up. So Fed cut rates, but yet mortgage rates went up. And now they're just looking for news. They just are looking for something to anticipate. So this is how fickle mortgage rates can be. If you see here, 6.3, we were down into like the 6.1 range on a fixed conventional or right around this time here in late October. So hang in there. A few good things out there, really close to 5s in the FHA and VA realm. And of course, under that with shorter term mortgages. So the labor data is showing how unpredictable things can be. So this is a good chart for the unpredictability. It exemplifies how forecasting day to day is so difficult. So this reinforces my point. Focus on a longer term strategy. That way you'll have less stress and then more success. Okay, so next, what else has been going on in the world? Oh, I don't know. You've probably been seeing huge news hit social media. Big headlines, trying to just shake things and make stuff happen here. But number one, you probably saw that there is the removal of a minimum credit score with Fannie Mae for conventional loans. So I will say on this, beware. There's a larger conversation here happening behind the scenes with bringing on Vantage scoring model to compete with FICO scoring model, which we're all used to and have been in the mortgage world for decades now. But they have to make sure that both reports are going to be able to be implemented into the underwriting process. And I saw a lot of social media posts from really just salespeople touting how this is going to make so many more people eligible for loans. What I'll say to that is consume social media content with care. Not everyone in the industry or not everyone that posts about these things understands or knows what's going on or what they're even talking about. I'll be adding some more information, really going in depth on this to come. But you'll see all sorts of headlines around this. And, you know, it's very hard to get approved for a conventional loan based on credit history. If you have a score around 620 or lower, there's likely something on there that a conventional underwriter might say no to. So just because there's no score limit does not mean that they're not going to still look at the credit history, and there could be something there that says no. There's also there's so much more information. I'll get a video out on it. And secondly, probably saw a lot of articles about a 50-year mortgage. You know, obviously right now 30 years the gold standard. But again, I'll release more content around this. Personally, I don't like it. I think it's an even bigger Band-Aid. You know, this is all about affordability and trying to solve affordability for people. But I think this is a huge Band-Aid that doesn't really get to the root of any real affordability problems, and more than kicks the can down the road. So it's not set in stone anyway, but it's another reminder to be careful of what you hear online versus actually what is taking place right now, especially if you're shopping for a mortgage, whether it's currently or soon here. And I'm happy to help. So I'm here to reach out, or I'm here to help, sorry, if you want to reach out with any questions or even just discussions that you'd like to have. If you want to dive into this, you know, send me a message, comment, and I'm happy to help you walk through it. To me, I love this as a picture, Wolf of Wall Street. This is a perfect example of how headlines are for sales. So don't get trapped by headlines. But anyway, this is the Insider for this week. Please follow and share with your friends to stay in the know about anything mortgage and real estate related in this crazy market. And I hope you have a great week, everybody.